I like, as an individual investor, I tend to like it when the markets are destabilized and people are making irrational decisions and the markets are inefficient. But that's also a hard time to raise capital. Now, the good news is you have pretty still waters relative to default rates and things in our market. Maybe harder for us to differentiate ourselves. Over 20 years, we have less than a blended 1% default loss. That looks pretty good when times are tough. Now, pretty hard to buy it. You have to look to run into a default now. But you're still getting, with those low default rates, a nice spread over treasuries. We're actually, for all the comments on spread in the market, we're at pretty much a 20-year historic median at 500 basis points over treasuries. And for the kinds of loans and investments we make, there's a lot of things on a direct basis, a lot of middle market type situations. We're still getting 10% plus coupons in a lot of things we do.
Among the four areas in which you're active, high yield, bank loans, mezzanine debt, distressed investing, which offers the most opportunity right now? From
an investment perspective, anything where we can make a direct investment is provided greater yield for us. And
as opposed to playing in the secondary market?
Secondary market or even primary public markets. So, and in each of those categories, we have a big investment platform and do a number of transactions directly with companies. So bank loans now are typically 6 to 7% in high yield bonds where we go direct. We can end up closer to 10%. Mezzanine and distressed debt, historically, we've both done returns well into the teens. And hard as it is to believe in this environment, we're still seeing opportunities in those zip codes.
Where is the economy most underserved when it comes to credit right now?
The middle and lower middle markets, smaller companies are, and many times when we make give a term sheet to a company, we're the only ones who are providing the term sheet. There's still really a credit crunch out there for your basic middle market, below investment grade corporate credit.
And how much of a drag is that on the economy?
I think it is a drag, and I think it's it's one of the challenges we're going to face in trying to get back to economic prosperity here, is to really start being able to lend money to companies that are good companies that provide needed goods and services to our country.